Are you tired of losing money in trading? Changing how you think about trading can change everything. And in this video, I'll share with you the 4 mindset shifts that help me to finally become a profitable trader and how they can do the same for you. Can you remember one time you took a trading loss that really hurt you? It probably left you feeling angry or even afraid to trade again. These negative emotions are one of the biggest challenges in trading. However, successful traders have learned how to manage these feelings, and they do this by adopting one mindset that helps them to stay calm and focused even when they are losing. Here is a story that completely changed how I think about trading losses. I used to be obsessed with predicting every market move. It was exhausting, and honestly, it just did not work. But then I came across this analogy that really shifted my perspective. Think about baseball. A batter with a 30% success rate, meaning they get a hit only 30% of the time, is considered a star player, a Hall of Famer. They fail 70% of the time, yet they are celebrated for their achievements. So how does this baseball analogy apply to trading? It might seem strange, but it holds a powerful lesson about winning and losing, and how to make consistent profits even if we are not right in every single trade. Just like the baseball player cannot hit every ball, you cannot win every trade. The key is accepting this. This is called the probability mindset. It's all about focusing on the long term. Here is an example. Let's say your strategy has a 60% chance of losing you $50, but a 40% chance of winning you $100. You are more likely to lose on any single trade. But if you make enough similar trades, the odds shift in your favor and you actually come out ahead in profit. This mindset helps you to detach from the emotions of individual wins and losses. Instead of stressing over every trade, you focus on the bigger picture. And here's a practical tip. Track your wins and losses over 20 or 30 trades. This will give you a clearer picture of how your strategy is really performing and helps you to stay focused on the process. By accepting losses as a normal part of trading and focusing on the long term, you will trade with more confidence and more consistency. Now, most traders enter the market to make money, which is perfectly normal. The thing is, successful traders think about profits differently. They are not obsessed with chasing every single dollar. They focus on something far more important. Let's explore what that is. I don't think I'll ever forget my first 3 months of trading. I was so focused on identifying perfect trade entries that I overlooked something that was far more important. In my first month, I lost 55% of my account. The next month, another 60% of my remaining balance vanished. By month number 3, I was down to only $20. I felt crushed. Those losses were a painful but unnecessary wake-up call. I realized I was making a fundamental mistake, being fixated on profits and neglecting something much more critical. So what was I missing, and how did it turn things around for me? The crucial element I was missing wasn't some fancy indicator or a secret strategy. It was something much more fundamental. It was a shift in how I saw myself as a trader. Most of us start as profit seekers. We are excited about the potential, the big wins, and the quick money. But focusing only on profits makes you emotionally attached to every trade. You start chasing profits, taking unnecessary risks, and ignoring potential losses. This is a recipe for disaster. So what's the real solution? It's realizing that successful traders are not profit seekers. They are risk managers. They know long-term success is not about squeezing every last penny. It's about protecting what you already have and growing it steadily. Think of a ship captain navigating a stormy sea. His priority is not getting to his destination very fast. It's keeping the ship afloat and everyone that is on board safe. Just like that captain, a risk manager prioritizes protecting their capital. They know losses happen, so they plan for them. It's about protecting what you have so you can grow. And here's how to become a risk manager. Number 1, define your risk tolerance. Ask yourself, how much can I comfortably lose on one trade? How much over several trades? Knowing your limits is the key. Number 2, always use stop loss orders. They are your safety net. Automatically, exiting you out of a trade at a predetermined loss level. And this will keep you disciplined and prevent emotional decisions. Number 3, calculate your risk to reward ratio. Before entering a trade, ask, how much could I gain versus how much could I lose? Aim for a good ratio, like a potential $100 profit for a $50 risk. This will help you to make smart, calculated decisions and not emotional ones. By adopting the risk manager mindset, your trading will become more consistent, more controlled, and way less stressful. Trading is a journey, and this mindset will keep you on course. I know how tough it can be to shift from chasing profit to managing risk. It is a struggle, especially when you are just starting out. It is easy to get caught up in the excitement and forget about protecting your capital. So to help you with this, I created something special, the 7-step plan to financial freedom through trading. It is a free 30-minute video course that walks you through smart risk management step by step. It will help you to avoid those devastating losses that can wipe you out. And over 4,000 traders have signed up for it to build their confidence and protect their accounts. Click the link in the description to sign up and take control of your trading journey today. Now let's talk about something that many beginner traders experience. You start out super confident, thinking like, I've got this. I'm going to crush this market and I'm going to make big money as a trader. Then you hit a few losing trades and that confidence starts to crumble. You doubt yourself, question your strategy, and maybe even start panicking that you will lose all your money. These thoughts usually lead to revenge trading. That is, trying to win back losses quickly, which often makes things even worse. But what if there was a simple mindset shift that could help you to avoid this? Now for me, even after learning about risk management, I still struggled. I would create a solid plan, but when the market moved, my brain would start going crazy. I remember a forex trade in 2017. I had identified a strong support level, set my stop loss, and felt good. Then the market went against me and closed me out for a loss. Logically, I should have moved on, but my frustration and anger started rising. I was right. The market was wrong. I later re-entered the trade thinking I could outsmart the market, but the price kept falling, hitting my stop loss again for a much bigger total loss this time. This painful lesson taught me that even with a good plan, your emotions can wreck your trading. I needed something much more than discipline, a way to overcome these negative emotions and stick to my plan even when every fiber of my being wanted to fight back for my money. I needed a mindset shift. The thing is, trading success is not about being right every time. It's not about predicting the market perfectly or finding some holy grail strategy. It's about trusting the process and having the confidence in a strategy that you have tested and refined. One that you know has an edge over time. Think of it like flipping a weighted coin that lands on heads 60% of the time. Now, you wouldn't just give up just because you get a few tails at the beginning. You know the odds are in your favor, and trading is similar. Even with a winning strategy, you will still have losses. The key is to stick with your plan, knowing that over time, your edge will work out in your favor. This means detaching from the profit and loss results of individual trades and focusing on the long game. When you lose, don't panic. Remember, consistent execution of your proven strategy is what will ultimately put you on the path to becoming a profitable trader. So write down your trading plan and create a pre-trade checklist to avoid making trades that are driven by greed. And by focusing on consistent execution, you shift your focus from the unpredictable outcomes to the controllable process of following your plan. Now in trading, losses are inevitable, but accepting them emotionally is usually tough. The key to becoming a profitable trader is not about avoiding losses entirely, but it is about changing how you think about them. When you fixate on winning every trade, you make each loss a personal failure, and this will trigger fear, doubt, and anger. This will then lead you to chasing losses, breaking your rules, and making more emotional trading decisions. So how can we handle losses without derailing our journey to becoming profitable traders? The key is a shift in perspective. Instead of seeing each trade as a win or a losing battle, think of trading as an ongoing journey. It's not like a football game where there is a clear winner and a clear loser. Trading is a continual process. Markets are always evolving, presenting new challenges and opportunities. So the next time you lose money on a trade, ask yourself, how does this one loss compare to the thousands of trades I will make over my career? It is just one small step on a much longer road. So instead of dwelling on individual losses, view them as valuable feedback. Analyze them objectively, learn from them, and refine your strategy. This mindset shifts trading from the thrill of winning to a journey of continuous growth. It's about building resilience, emotional stability, and ultimately achieving consistent results. You will become a stronger and more confident trader, one small loss at a time. Now, even with the right mindset, many traders still struggle to know how to limit their losses. But what if there was a way to control those losses before they even happen, even before you enter the trade? Click to watch this video where I explain a simple strategy that will protect your trading capital and prevent you from blowing up your trading account. So see you in that video.